Hey guys, and welcome back to Charlotte Mortgage Insights. Hope you guys are having a fantastic day. If you are a first-time home buyer and you're out there looking for a house, obviously the first thing that we need to do is figure out how much you can qualify for. But just know that there is a difference between a thing called a pre-qualification and a pre-approval. And this video is all dedicated to stop mistakes that you may make that could cost you money if you go under contract not knowing what you really have in hand. And this really applies if you are shopping online mortgage companies. A mortgage company that's local does matter. So, Stephen, pre-qualification, pre-approval, tell us about the differences here.
And thanks, Brian. Big difference, even though a lot of the times those words are used as synonyms, they are not. So what we have, sometimes it falls in our lap as a save a deal. And what happens is somebody was pre-qualified, which basically means they put in data into a website and it spit out a pre-qualification letter. Data wasn't verified, it wasn't validated, and it wasn't fact checked. So, if you accidentally put that you made $100,000 a month instead of $100,000 a year, well, of course you got approved for a loan. Why wouldn't you, right? So what we do is we do a pre-approval and we take it one step farther and we actually get validations on income, assets, employment, and a few other things that are super important. So when you are done with our process, you have a borrower approval. It's been verified, validated, and underwritten so that when we present that offer to not only you, but to your real estate agent and the selling party who, the home you're trying to buy, with certainty, we can say the borrower is done. We just need the house so that we can get insurance, title, and an appraisal. That's super powerful, especially when the market's heating up a little bit and there may be more than one offer coming in. You need to make sure you stand out.
Yeah, and we see this on the listing side probably more often than I'd like to see it, where we get an offer come in and it says, "Hey, you've been pre-qualified for 400,000." Well, then it's like, okay, that doesn't make me feel really good because it doesn't say anything in the pre-approval letter or pre-qualification letter in that instance that the credit's been run, number one, but income verifications, asset verifications. And we ran into this a few months ago, if you remember, on that one listing that we had. These people went under contract on a $795,000 house, and they ran into mortgage trouble like 3 weeks into the deal, and somehow you got a hold of it, Stephen, and you're like, these people haven't even, the lender they were talking to never even checked their tax returns, and that was a big old mess, and they ended up having to do a bank statement loan at the end and pay a ridiculously higher interest rate. So that guy's
it's unfortunate when that situation presents itself. And another thing that happens, you put a key point in credit report. Certain online lenders, and even myself, we can all use what's called a soft pull, right? So the positive is it doesn't create an inquiry, but it doesn't also create a valid report that we can get an underwriting approval with. So a soft pull is a snapshot that day and that time, but it's not a document that can be used for underwriting. So the soft pull today, it might show that your scores and your debt is perfectly fine for a loan. You go under contract 3 weeks later and they do a hard inquiry, a true credit pull. That day is what's going to set your loan approval into motion. Your credit score could change. You could have maxed out a credit card. You could have had a collection hit. So a soft pull, which is a positive in a lot of different ways, it doesn't also give you that guarantee that you have a underwriting approval. So that's sometimes what happens too when people use the pre-qualification and the soft pull. It's a placeholder, but it's not something that you should have in place when you go to make an offer.
Yeah, absolutely. So guys, just be careful out there, right? If you're thinking about getting into a home, and not only first time home buyers, but any home buyer, the people that I was just referring to, that listing that we had, they had $10,000 of due diligence money on the line. And by the way, this was like their fourth house they've purchased, right? And they went to the online shop, put in their information, and wait a minute, you've got business expenses. This is really not your income at the end of the day. Just be super careful out there. So if you have specific questions and want to get a true actual pre-approval, guys, all of Stephen's information is in the description below. And if, of course, you need our help at Dreamline Realty finding that perfect house, you can locate me down in the description as well. But just wanted to bring this out to you guys to make sure we're protecting you from making a mistake that could cost you a lot of money, where this could really be cleared up on the front end. So Anyway, guys, thanks for watching. If you haven't subscribed to the channel, we would love you to do that right there. Hit the like button while you're at it, and we will catch you guys in the next one. Have a great day.